Welcome to Trade Pro. Let's talk about a rule that you should add into your trend following strategy that will ensure you're entering into trends at discounts and exiting at premium prices. This can greatly improve your results, making sure that you follow this rule to a T, and you'll see how well it works when I outline it for you here. So the indicator that I have on my chart, all it's doing is outlining daily highs, daily lows, and putting a midpoint halfway between the daily high and daily low of each day. This one is called the PD Fibonacci Retrace by Shizaru. You can see it here. And all I've done is slightly change the style of it, but essentially the default settings are still intact. So we have a midline, we have a daily high, and we have a daily low. How can we use this to our advantage to make sure we're getting into trends at discounts and exiting at premium prices? Well, first we need a trend bias. So if you have a bias that the trend is going to be heading to the downside, in that environment, you want to do it like this. Look at the previous day's midpoint to the daily high. So let's say our trend bias on this day is that we're going to be seeing continuation to the downside. We come into the day with a strong rally to the upside, and essentially we want to be getting in at a discount in the context of a downtrend, looking for this continuation move. Now, a simple rule that you can add in that uses this indicator is waiting until price has retraced into at least the midline and between the midline and the high of the previous day. So I'm just kind of drawing that out, the previous day's high, the previous day's midpoint, and this is where we can look for our short entry. If you have a rule that you are not allowed to enter in unless price is in this range between the previous day's midline and the previous day's high, entering in at that upper bound range of this current day, you can make sure that you're getting in at a discount and not entering too early or at a bad price into the context of a downtrend. So looking for whatever rule you may have that tells you to enter. So whether it be divergence up here, which I'm sure we could spot some if we put up some indicators, or looking for market structure breaks, or whatever support and resistance, whatever method you want to use, you can use those methods to enter, but making sure that we're getting in at the discounted range of the previous day and the current day. So of course, the current day here, we wouldn't know exactly where it's going to end up with our midpoint, our high, or our low, but we are going to be assuming that this is going to be heading to the downside if our trend bias is to the downside. Okay, so getting in at this upper range to making sure that you're getting in at a discount is going to be very helpful. So let's do this again, but now we're on this trading day here. Okay, let's take a look at the previous day's midpoint and high for our trend bias is to the downside still. And we can kind of put it out there. And this is going to be our shorting range. So this whole entire time, no interest at all. There's no trades down here until price comes up into the previous day's midpoint and between that midpoint and the previous day's high. Once it's up here, then we can start to look for our rules that tell us that it's okay to get into a short position. And knowing that we are at a discounted price point. So this day's low way down here, definitely at a discount up here within the context of this day and in the context of the previous day, this is a discounted price. So we want to be entering into our trends at discounts, of course, and exiting at a premium. So now that we take a look at this day, let's get rid of this and we'll take a look at the next day where we have a bit more of a funky price action. So on this day, we have our high here. We can push it out. So on this day, we're in discounted territory quite a bit. And we can also take a look 2 days back and do our same thing. And essentially, this is the area we want to be getting in. We can take a look at this previous day 2 days back, since price is still quite high up here in the context of this overall downtrend. And we want to be getting in at this upper range. Look to get in at the upper range of your daily ranges. So the top half, the previous day, can look 2 days back, look at that upper range, and that's where we want to be getting in to our downtrends if your trend bias is to the downside. If you have a bearish trend outlook, then that's where you want to be looking to get in. So now we can do it again. This next day, high of the day, midpoint, equilibrium of the day, and we have a wick here, we have a wick here that goes into this range. Those are the only shorting opportunities that you would have on this next day, getting you in at a discount with the best possible price, looking for a continuation move to the downside. Now, talking about exits, we can look to exit when price is in this bottom end of a range. So if we were to be getting in this upper end here, where do we actually want to exit? Well, we definitely don't want to exit while it's still in this upper range. We want to be getting in near lows of the previous day, or exiting, not getting in, or new lows. We want to be expecting that, this at least is underneath the midpoint of the current day if we're going to be exiting and booking our profits, depending on how long you think this downtrend is going to last. You could just exit right here when the previous day's low is taken out. You can exit if you're a much short-term trader, just as soon as we come under the midpoint of the current day. And you could be exiting on, a full trend continuation to the downside as well, if that's what you wish to do. So whatever your strategy tells you to do, that's fine. But making sure that your entries are at discounted prices is going to put you on the right side of the market with a good risk to reward ratio. So let's do it again and see how we miss out some days. So this next day, can extrapolate this out. We never see prices come back into this range. Same thing happens again. We never see prices come up. And here we do. So this is our next opportunity. Okay. So we see this right here is our sell zone. Getting in here, obviously, in hindsight, worked out very nicely. And whether you want to take your profit at previous day lows or look for a full trend continuation, that's up to you and your strategy to determine. But essentially this rule that I'm covering is to get in at a discount and ensure that you're getting into trends at discounted prices. Okay. So let's take a look now, and you're eventually going to see a trend flip. So you're going to see a larger pullback or a trend switch where our trend bias will shift. And then we can start looking for our longs in the lower regions. And so if our trend has flipped here, so we're looking at higher low, higher high, which we see on this day. This day creates a higher low and a higher high compared to this day. So let's say we flipped our trend at the close of this day right here, because we get a higher low and a higher high, and we're seeing breaks in structure. Now, if that's the case, then we want to flip our trend bias to, okay, now we're going to be looking for longs in this lower end range. And so you could be longing or looking for a long opportunity down here, which is, just happens to be the absolutely best time to get in on this given day, because we believe now that this day here, so it's out this day, we believe that it's going to put in a low and we're going to see higher movement. So our target could be this previous day's high, or whatever other thing you want to use to determine your profit target, whether it be just a risk to reward ratio or another method of taking profit. getting in at these lows and having a rule to keep you on, the right side of the market for trend bias, as well as a discount. Having a rule to get in at a discount is important. And we can do the same thing again. So if you still have a bullish trend bias, this day closes out, we can draw it out here. This is quite the range here. Big range, since we saw such a big day here. Just get rid of these drawings and we'll draw it back in. So kind of putting this out. I want to be anticipating daily lows. So if we're still bullish, we want to be anticipating daily lows to be put in place. And we can look for those daily lows down in here. So this move down, we can start looking for reasons to go long if we have now a bullish trend bias. Okay. And essentially we want to be exiting above the midline at least. So at a premium, we want to be exiting. So if we can get in at the bottom end of a range on close to the daily low, anticipating that we'll see the next day as bullish. If our trend bias is bullish, we're going to be looking for a good risk to reward ratio if our planned exit is in this area. And whatever reason you may come up with, whether it's a bullish divergence down here, or you wait for some sort of break in structure on a lower time frame or on this current time frame, making sure that you're getting in at a discount. That's what we're talking about here. Okay, it's going to put you in the position to capture moves in your favor, instead of going short down here right before this pullback. And who knows, maybe this is now going to continue to the downside, but you just got stopped out if you shorted down here. At least get in, whatever your trend bias may be, at least enter into that trend bias at a discount and not when price is already extended. Okay, so that's going to kind of cover it. Hopefully it makes sense, kind of a freestyle video there. And thank you guys for watching and have a great day. Don't forget to like, comment, subscribe if you haven't. Thank you.